monthly seminar on auditing and accounting standards and also ethical standards. We have with us the CAR sir, who will take us through the criticality of the standards. On behalf of all the members present here and the Office of SIRC, we welcome you, sir. Please come and talk to the guys. As we are celebrating SIRC's 75 years of independence, integrity and excellence, let's honor its past, engage with its present and envision its future. My ICI, my pride. That is all raised for ICI Modosum as a mark of respect over knowledge.
सुप्तेषु जाग्रति येष सुप्तेषु जाग्रति कामं 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 कामंशो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद ब्रह्मा तद ब्रह्मा अस्मिन् लोकः अस्मिन् दोषः शतः सर्वे तदूनात्यनीतश्च नात्यनीतश्च एतद्वैता 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 एतद्वैता
Thank you, please be seated. The agenda for today, we have only two sessions, morning session and afternoon session. The entire morning session will be handled by Sudharajan sir. May I now request Krishna Devi madam to come forward and present a memento on behalf of SIRC, please. Thank you, Varun. Thank you, Krishna Devi madam. Thank you, Krishna Devi madam. With this, I hand over the further proceedings to CAR Sudharajan sir. Over to you, sir.
Thank you, everyone. Good morning to all of you. The formalities are over. It's for us to deliberate. Originally, they had asked me to address on criticality of accounting standards. Subsequently, there are some conflicts, so they asked me to add code of ethics also. Code of ethics, in fact, I handled the same topic, code of ethics, in December 2023, very recently. So I was having a hesitation, but fortunately, I don't see even one phase it has been addressed on this December. Because always, if the same song is repeated, after one or two occasions we feel bored. So let us try to make it as much as interactive as possible. So the topic first which has been given is criticality of accounting standards. This accounting, criticality of standards rather, both accounting and auditing standards. I am not going to go into the standard by standard because that is not my cup of tea. I am just going to touch upon what are the critical areas, important areas, and how it can be done, and where it is having a direct relationship with code of ethics. So is that it? Even though it is very, very primitive to talk about this, but let us spend some time on this. What is auditing? All of us know, but still I would like to mention that it is an independent examination of financial information of any entity, opinion driven. So the concept is we are going to give an opinion on any financial statements. That is what is exactly auditing all about in simple term. But the point which is important to notice, each and every word is important. It has to be an independent examination of financial information. We don't go beyond financial information except the recent development wherein we are also going to talk about financial information as part of the director's report. That is also to be added nowadays. But still, effectively our report is only on financial information and of any entity. It need not be only corporates, it can be corporates, non-corporates, NGOs, all these things put together. And apart from that, it's an opinion driven. So ultimately, we are going to give an opinion which is true and fair effectively. In certain places, true and correct, and many of the places, true and fair only. Very few places we are going to say, for example, in case of tax audit, etc., we are going to say it's true and correct. Other than that, invariably it is true and fair only. But there is a huge gap between true and fair and true and correct. But the reality, in today's scenario, in view of the investigation authority, it has become a very, very thin line. Because what they perceive, I'm only talking on that area because today they want to combine with the code of ethics. So I'm just combining that code together. So they are trying a very, very thin line. See, when I say it's true and fair, he says it's not sufficient to see only to that extent. You have to see slightly in deep and more. Actually speaking, we know the traditional word and auditing. An auditor can be only a watchdog, in or be a blood wound. But that is not expected of us. Take the case of as many cases as possible in case for NAFRA, Legal Code of Conduct, NAFRA. They are asking from smallest of the smallest thing they are requesting in this NAFRA. The intention of NAFRA basically is to ensure that the financial statements which we are surveying is showing a true and fair view and whether we have done the audit in a proper manner. That is the intention. But now, once an item is going into the investigation, they are going beyond all those levels. And they are starting from the first stage of whether you have sent the no objection certificate to the earlier auditor. Right from that they are asking. So NAFRA effectively does support only on this third item which is mentioned as financial information. Whether I have certified the financial information properly, whether you have done the auditing in accordance with the auditing. Am I audible? Small crowd and always vulnerable in a small crowd. If anybody is finding it difficult, you can come forward, there's no problem. If you want to resettle before, you can resettle. So basically on the financial information only, our entire subject is going to be happening. But nowadays it's becoming more and more critical and more. So basically this audit is a systematic process. Established criteria. All of us know what is the criteria which has been established. What are the accounting standards to be followed? What is the schedule to be followed? What is the I'm sending the entire soft copy to you. Critical items only you can note down. Since it was cleared in the last moment, I had to combine both the sessions and bring it. That's why I am not able to send the material earlier. So ultimately, we are going to talk about what are the documents you are verifying and what are the evidences which you are supposed to verify. On the basis of the evidence, how we are going to drive our opinion. And what is the independence which is there and what are the third party relationship. Basically, I cannot do an audit of my son or my father. Basically, that is the starting point. So anywhere, that should be an independent examination. I and the auditor and the auditee should be totally independent. Then only there should be a reasonable conclusion on the basis of which I will be able to say a true and fair view. Otherwise, effectively, my independence is affected. Once an independence is affected, obviously the audit process also will be getting affected. What are the types of audit which is coming? Please tell me if I am going a bit fast. I am facing it in a proper manner. Statute audit, all of us know. Statute audit in respect of corporates, non-corporates, LLPs, trust, societies, etc. What are all the statute audit according to the statute what we are doing as audit? Internal audit, all of us know about verification of internal controls and effectively how the risks are managed and whether the risks are overridden. All these things is coming under drawing. That is also part of the audit only, because there are standards on internal audit which has to be followed whenever you do an internal audit. Because there is a wrong perception among the people, members, stating that only statute audits will be coming under the purview of NAFRA or Code of Conduct. No. Now the NAFRA is extending that scope to audit committees also. So basically they are expecting the audit committees also to be opened up, because nobody can just like that close their eyes. Somebody else has seen. That is the intention. So each of us are having the responsibility to do the audit. So when I do an audit, I cannot say that I am dependent on third party's certification. Same way, third party who is saying that I am only giving a certification, I am not responsible for that. That is not the way.
For example, take the case of related party transaction in respect of AS 18. So when I do an audit of a particular company, I am listing out the related parties as given in this by the management. I cannot just like that depend only on the management certificate. Same way, the same AS 18 related party disclosures will be disclosed by the company secretary, who will be giving an independent certificate. I cannot also say that is the only certificate which I am able to do. That is the certificate given by the management, certificate given by the company secretary, both has to be consumed and subsumed in the audit, and I have to examine independently whether any other related party is disclosed or not. Take for an example, just for an example, I am always happy to take up with an example because it will easily go into the minds of the people who are listening. I am also learning, you are also learning. Only thing is basically sharing on the basis of being on the high side. Take the case of an audit of Reliance Industries Limited. World knows Reliance Industries is belonging to Ambani's group. Just because the directors are two independent, probably Sundar Rajan and probably Ganeshan, two independent people who are the directors, just because of that, you cannot come and say that the related party disclosures are not required in respect of transaction between Anil Ambani and Mukesh Ambani, as the case may be. This all of us know. But still there may be a certification given by the company secretary, still there may be a certification given by the management. Why I am insisting on this particular point is, we are supposed to, auditor has to open up his eyes and ears beyond what is being given to him. The certification is not sufficient. That is what exactly audit basically. It is important that we have to take an MRL. It is important we have to take an expert opinion, but that is not sufficient to protect you in case of an issue. So before coming up with an issue, before facing an issue, we have to ensure that we ourselves apply our mind. I will share a classic example. In one of these cases in DC matter, contingent liability. One particular year contingent liability was not disclosed. The next year contingent liability was disclosed. It was taken, that is one of the creditors made a complaint to the institute saying that I was a creditor, I was an MSME creditor, neither my balance was outstanding, I have shown as another MSME number 1. Second issue, I have disputed my liability, it has gone to the court, but they have not shown that they are contingent liability. The point is, the case which has gone to the court was not known to me at all by any stretch of imagination on a particular day. Let us take for an example, 31/3/2022. I did not know at all because the audit was done in July 2022. By that time, I did not have any sort of information whether it is a case is going on or not. But when I do for 31/3/2023, which is subsequent year, I had a company has incurred legal expenses. On that basis, we examined what is the legal expenses. We asked for what is the case which is going on. What are the cases which is going on? At that time, they gave the information about this case. Then we found out that I am talking about an auditor who was examining that, and then he could find out that there is a case which is going on, and what is the status of the case. I was able to give the contingent liability. The earlier year, I did not have any iota of information. But what has happened is it went to the DC bench where they asked the auditor various number of questions. What small gap which was available is this auditor was earlier, he examined this particular company's dispute with that party and finally decided that X amount is required to be paid and that amount the party has paid. So the auditors assumed that I have done the reconciliation, I have examined and finally decided, I am talking about the earlier years. In 2021, 1 year before I became the auditor, I gave a certificate. So in that situation, I have to assume that X amount is due, that X amount is paid, so there is no dispute, I have signed it off. But that X amount he has disputed in the arbitration, and the arbitration has referred it to a court, and he has filed a case in the court, and they have referred to an arbitration, and arbitrator decided on a different amount to be paid, which went for a dispute. So all these things has taken 1 year's time. But what they said is, after all, as an auditor, you know there was a case which was going on in the earlier occasions, not a legal case, there was a dispute between them, you should have referred as a contingent liability. He has mentioned, he has shown 3 contingent liabilities. One, an income tax case, which is pending, one GST case, and one case with the BSNL. All these 3 items he has disclosed in the contingent liability. This particular contingent liability of 1.5 crores was not disclosed. He was punished for a month. Why I am telling this much of extent is, there is an MRL which is going to protect him. He does not have any case which is there in this financial statement. There is no legal expenses there. Still, since he was aware of this particular case in the earlier occasion and he has not verified and reported in this, he was punished for 1 month. Of course, it has gone for an appeal. In the appeal, it will be won because as far as audit is concerned, we cannot go beyond what is provided to us except to the extent when I have a suspicion. Whenever I have a suspicion, I have to go a stage bit more, but otherwise I need not go. Why I am telling this is, audit has become very vast area now. It is no more the cushioned area where I was able to say that I am only a watchdog, I am not a blood wound. That concept is now gone, because whether it is required for all the cases, that is the next question. Whether it is required for all the cases, sir, there is a proprietorship, sir. It was a proprietorship, it was made as a partnership between husband and wife. They are only private limited companies. Whether I have to go through all these information in that company also, there is a possibility that we will be required to go there also. The reason is, the dispute itself will become, these two people will be the disputed parties. At that situation, we will be played as a football. We will be a football. So please ensure that don't take anything for granted. Don't take anything for granted. If you have a suspicion, better you dispute. If you don't have a suspicion, you can proceed with that. Only thing is, you please keep your records in a proper manner. Third item is tax audits. Tax audits, all of us know what to do. On fourth is concurrent audit, very dangerous. As far as bank concurrent audit is concerned, it's very dangerous, because whatever we see in respect of concurrent audit is not the thing which is happening. What is seen overall is not the thing which is happening. There are lots of things which are undergoing behind the scenes in respect of all these financials. So concurrent auditors' responsibility is phenomenal. Auditors' responsibility is high. Concurrent auditors' responsibility is phenomenal, because nowadays banks are also insisting that you have to be there for 26 days. The member students has to be there, and the SBA gave a condition in the recent concurrent this thing. I don't know how many of you are applying for concurrent. They asked us, the students have to be there in the office, the branch office, in parallel to the staff. In parallel to the staff. What does it mean? We have to be there from 10 to 5. My staff has to be there for all the 26 days, number one. The partner has to come for at least 7 days in a month. And one more chartered one can come, probably for another 10 days. Then what is the cost which is going to save, which is not going to happen. But that is the reality. I am not bothered about this. What I am bothered is, they are giving this much of extent. What does it mean? They are expecting us to give more and more performance. They will do all sorts of mischiefs. Right from the clerk till the AGM, they will do all sorts of mischiefs. But they ask the auditor to find out. That is the reality today. I hope all of us are Tamil only, because I am just jumping between Tamil lines, just for keeping it light. So the point is, the auditor's responsibility is increasing day by day. So we will have to ensure that how we are protecting. Basically, that's all. We cannot, just like that, for that sake, we cannot run away also. We are married to this profession. We are supposed to do all these things, but how we will overcome that and protect that is very important. And last is other audits, forensic audit, IS audit. IS audits is once again, when we do an audit of a bank, we are dependent on IS audit report. We say that information systems has been done by an independent auditor. On that basis, we are concluding that. So obviously, the IS auditor's risk is also more. Same way, wherever ERP implementations happens, so we are insisting on the IS audit report. IS audit is also very important. If it is done by auditors, we have to be more careful. I can proclaim that I am a DISA qualified, but I am not able to do any systems audit at all, because what we read in DISA and ISA is not sufficient to do the information system. It requires more and more important. IS audit, social audits. Nowadays it is growing up in respect of social audits, because NGOs are subject to social audits. So wherever we give a certification in respect of the social audits, CSR also is being certified by us in many of these situations. Any certification is an underscription. Please understand, whenever you certify, sign and put your unit, it is an underscription only. It need not be only an audit of true and fair. That is not the case. Anywhere you certify and put your unit, all those things are coming under functions only. So please ensure that we are protected to the maximum extent possible. By the time I go, we keep on talking about different cases. So let us talk about who is a good auditor. All of us are good auditors only, in my opinion, because nobody wants to call themselves as a bad auditor. All of us are good auditors only. But on technical times, technical sides and theoretical side, who is a good auditor? On the personal side, on the professional side, both these items are required to be maintained by an auditor to ensure that we do it in a proper manner. Independence, integrity, confidentiality, objectivity. Independence, as I told you in the initial stages, we have to be independent of the client. We are not supposed to be having any connection with the auditors, clients. Immediately a question came up in this package. They were asking us whether I am an auditor of a real estate company. Should I not buy a flat from him? is becoming dependent on them, or he is becoming dependent on them. It is not the case. One-time occasion, one-affair occasion is not an issue. Number one. Second issue, at anything purchased at a fair market value, it is not a question. If you are going to buy a property at Mount Road at the rate of 2,000 rupees per square feet from somebody, definitely it's questionable because your independence is bargained or compromised. So same way, if I am buying a property from another person in Alayar at 20,000 rupees, which is running the market value, there is nothing harm in that. There is no harm. So all these things are what you call interpretable, and it is not a standard question which is going to happen. But at the same time, as I told in the initial example, father doing the audit of son's financials or son doing the audit of father's financials is not acceptable. Because straight away the independence compromise will be there. So I have to be independent. I have to be integrity. Integrity has to be there. Because nowadays what is happening is auditors are being taken for responsibility for anything and everything as far as clients are concerned. They say that, sir, I did not do anything at all, sir. Whatever audit has done, I just signed on a sheet of paper which he has sent, and I did not know what is it exactly. One classic case which has happened in the very recent case is the turnover he has shown wrongly. The turnover was around 30 crores. A raid was happening subsequently, a real estate company. The raid has happened subsequently. They found out it is 45 crores. Obviously, there are on monies which are there which is 15 crores. So they immediately, the client has said, I did not do anything at all. The turnover which has been shown by the auditor is wrong. I have given only 45 crores as turnover. She has only signed as 30 crores, and he has filed the report, and he has also submitted to the institute also. Apart from complying to the income tax department, he has also filed to the institute, and case is started. The problem is, he does not understand that he gave his digital signature for doing all these things to the auditor, number one. Second issue, they have given a tally accounts for doing the audit. On the basis they are doing the audit, that also he does not understand. Once somebody takes up the case, he immediately says that it's not my responsibility, it is the auditor's responsibility. It's a proprietary case.
So in that case, suppose if he has physically signed it, then that
Yes, physically signed also.
Then
Yes,
that's
that's what he does not understand. What is the pitfall against him? He wants to put that. See, he comes and asks the auditor, sir, why you have not done this? You have protected me. He says, how can I protect you? The financials you have given is filed, I have filed. I cannot protect you against on monies which is not available on the records. But he wants to take a case against him. He has filed a case.
No, the problem is, BAC, they can, digital signature, they can tell that auditor himself as the sign he cannot put. He would have definitely.
So the problem is, I am telling you, your question is very, very valid. But in this particular case, on 30th of September, tax return is filed. They have signed and they have filed the return as SD. Subsequently, they got the signature. That's a different issue. Please understand. These are all the technical issues. That's what I was telling you. Where should be cautious. They have uploaded the financial statement as SD. Both auditor is SD, client is also SD. They have uploaded it. But subsequently, they got the signature and kept it on record. That's a different issue. But on that day, it is filed as SD, and they have created a union on that day. So now, the point will happen is this institute will ask a question. How did you file as SD before signature? He says it was signed, but only it was finalized at the last moment, so I have to upload somehow, I have to upload it. For which, what you call tax audit report is there. So tax audit appointment and notice has gone to that other person, OTP has gone, and the OTP only has been filed, so appointment is done, everything is done. So the member can come out of the issue, but please appreciate, coming out of the issue is not a problem. From the time the case is initiated till I come out, it will be minimum of 2.5 to 3 years. 2.5 to 3 years will be in a situation wherein we are not sure when my certificate will go up or when I will be hanged. Whether I will be hanged or I will put in an electric chair, I don't know. This is the reality. So the point is, what is precaution available? Please ensure that the clients are totally tankless. This is the real point. They are actually tankless. They feel so friendly with you, but they will become tankless when it is coming to a hit of their. I know a client. I have my client who has been there with me for 25 years. And 26th year when he had some problem, he said, that's a thing I'm which is not the case. Because the reality is we keep on telling them, but we don't tell anything to them in writing which is detrimental to their interest alone. I should not come and say, sir, you cash loan வாங்க cash loan வாங்கக்கூடாது நம்ம சொல்லலாம். சார் நீங்கள் வந்து கேஷாக லோன் வாங்கினீங்க 2 signatures violation ஆகும்னு சொல்லலாம். சார் நீங்கள் போன வாரம் இந்த மாதிரி வாங்கியிருக்கீங்க, அது 2 signatures violation ஆகிடுச்சு, பார்த்து பண்ணிங்க, இந்த மாதிரி பண்ணாதீங்க, நான் எழுதி கொடுக்க முடியாது. You cannot give it in writing. If you are giving it in writing, when you do the tax audit report, you cannot take means your own words. So we don't give it in writing certain things, but we keep on cautioning them. But அவங்க அதை காட்டிங்க காற்றுல பறந்து விட்டுற வேண்டியது. எப்போ ப்ராப்ளம் வருதோ அப்போ வந்து நம்மகிட்ட வரும். So please ensure that you keep your independence with the client. Integrity, of course, integrity is very, very important because nowadays what happens is this. I have, sir, please forgive me if I'm keeping up more and more examples. Why I am giving examples is then only we understand that. There is a classic case of TDS filing and tax remittance on account of department. One auditor is doing that regularly for consistently for a longer time. One particular occasion, see, whenever the money is received, that is TDS has to be paid or GST has to be paid on behalf of the client. Client means is a governmental department. They send the money to the party and say that this has to be remitted. And Form 1 has to be filed, then Form 3B has to be filed, whatever it is, they keep on giving the instruction. Same way TDS, they will say that 10,000 rupees TDS has to be remitted, all these things. Unless and otherwise they give the information to whom it is being paid, that is it is 184J or 184C or 184I, we will not be able to exactly put the challan and properly make the payment. One particular case, it has been going on very, very smoothly. One particular occasion, after almost 4 or 5 years, one particular occasion, one officer was not cooperative with this person, this auditor. And the auditor said that unless and until you give the information, I will not make the payment. He has accumulated around 25-30 lakhs, which is not being paid for a couple of months. 2-3 months, it has not been paid. He left it like that. He sent various letters, they did not respond. Unfortunately, the money was placed in his own current account only. He has not maintained a separate bank account for that. There was no wrong integrity issues in this, but institute projects in such a manner that there is an integrity issue just been created because the client has also gone to the court of law apart from the institute in this particular case because he has misused the money by himself. In this scenario, what has happened is he has not paid for a particular 3-4 months. Money has been taken in his current account. It has been continuously utilized. In this scenario, he is put under a situation of integrity. So when it is client's money, you keep it separately. Don't touch that. If you keep it in a separate bank account, nobody can come and proclaim that you have not made it, you have not done in a proper manner. After 1.5 years, a new officer had come and he said this has not been paid. That fellow has gone against him and went to the court of law. As far as government departments are concerned, please be very clear. Terms of engagement is important. What is your responsibility? What is their responsibility? It has to be very clearly mentioned. It is not an audit. It is not an audit. It is only TDS compliance. We are talking about auditing. In TDS compliance itself, this sort of issue happens. In audit, how much issues can happen? Please compare that. Confidentiality and objectivity. Please understand confidentiality of the client's information is very, very important. You are not supposed to share with anybody else whenever you do the audit. Same way, client is also supposed to be not sharing the information what they are sharing with us to others, but that will not happen. They will do it on their own. Objectivity, obviously the audits are being done only with an objective of certifying, giving the opinion on financial statements. So on the professional side, so if all these things are properly done, they are considered as a good auditor on the personal front. If you are able to confidently say that 4 items are very clear, conscious, I am good auditor. On the professional side, this is very, very important for us to sit down and read. I should have a proper audit planning, we should have an audit program, we should have a documentation and reporting. If these 4 items we are doing it in a proper manner, we are a good auditor for the professional state. For doing that, what is the problem? Please understand, whenever cases happen, as long as the cases does not happen, no issue. I am also signing 25 balance sheet, 30 balance sheet on a year, you will also be doing on a 40. But none of these things go as an issue. But if it goes as an issue, we are screwed up. Because definitely I am making it very clear, none of us are having a proper audit plan and program. Probably 10% of this crowd may have a proper audit planning and program, but 90% of us, honestly, including myself, I make it very, very clear, we don't have an audit plan and program for each and every audit. Do we have or not? Let us honestly say, I am not having in all the cases. But whenever a case is of 50 crores, 100 crores turnover cases, definitely we are preparing it. But in case of small cases, we don't do. What do we do? Opa, I'm also sales they are only traders. 3 months invoice, 3 months bank statements, petty cash watching flow. BRS BRS 31st March BRS kandipa paatradha paakamudaadu idu varaikum androm. What is our assistant seeing in case of a BRS? They are saying the BRS maintained with the tally. Yes or no? They are not even prepared taking the printout of the reconciliation statement. Subsequently, when an issue happens, we are not able to say that reconciliation has been prepared and seen. Because what is the reconciliation they have seen? In the tally all of us should be very fair with us. Go and put F5, there is no reconciliation statement comes, and the path there. Now, the elderly people here may be understanding that. What do we see as reconciliation statement is we pick up the bank balance, we pick up the book balance, difference we identify, and in that we say that checks issued not presented. Subsequently, when it was presented, check deposit not realized, when it was subsequently realized. If these two items has been properly done, Satyam fraud would not have happened. I am just telling you. If these two items has been properly done, Satyam would not have happened. Would not have been happened. So, when these items, we don't have a proper program. We know what is the program. Where is the written document for saying that what is the program which we have? And what is the plan? We are sending 3 people. One person to do reconciliation, one person to do petty cash watching, one person to do payment watching, purchase watching, etc. People are watching consider in case of larger accounts because straight ERP systems control whether inputs are properly examined, verify better. Say okay, where is the record which is available? Whether the ERP control systems which you are verifying are we taking as screenshots, we don't take screenshots. So how do we protect ourselves? So for all these things, we should be able to understand that we should have a proper planning, we should have an audit program. All these things are available in SAS. All things are available in standards auditing, and documentation is very, very important. SA 230. Without going through 230, you cannot do any audit at all. So what will happen if you don't have a proper documentation? You will not be able to prove yourself that you have done a good audit. That is, if at all I have to say good audit, let's say today I am able to say that I am a good speaker. Why it is happening as good speaker? Institute is calling, 25 people are sitting before me. That's all. Beyond that, nothing else is there. In fact, if it is 200, it will be Romeo Hall. It is 25, where I am eating MDP3. That is the reality. So, point is, there is an item that is required for a proof. Institute and also all the stakeholders are looking for the proof in respect of the auditing which has been done. So, if you are saying that you are a good auditor, you have to project yourself in such a manner that you have been a good auditor on both personal side and a good auditor on the professional side also. So what next to do? Sir, insulting another auditor, auditing is known to all of us. We have been doing audit for donkey's time. All of us know. It's all only refreshing, which is going to happen, except for the couple of youngsters here. All these things are only refreshing. So we have to ensure that we get updated on the knowledge. So knowledge not only on auditing standards and everything, it's also on the technology. Because today's position, what is available in Tally is not available in Voodoo. What is available in Voodoo, what is not available in Zoho. What is available in Zoho is not available in SAP or ERP. Same on the reverse side. What is available in ERP and SAP is not available in Voodoo, not available in Tally. And Tally, particularly from this year onwards, there is also a standard reporting which has to happen. All of you know what is it we have to say in respect of software? Audit trail. There's a big question which is being created in case of a SAP batch environment. They say, sir, audit trail is not required. Sir, why is audit trail required? Because audit trail is required only when you are able to make a correction to an entry. In case of an ERP or SAP, you cannot do a correction at all. You cannot do a deletion at all. It can be only a reversal entry. That is why whenever I pass an entry call, sales credited and one particular debtor is debited. So debtor debited to sales to the extent of 1 crore. Actually, I want to make that 1 crore as 50 lakhs subsequently. That is the intention. What is it they are talking about audit trail? You make some entries, subsequently you make the corrections without telling anything, telling anybody. So in this scenario, in case of a SAP or ERP, I am talking about the clients who are asking this question. In case of a SAP or ERP, this 1 crore entry can never be deleted or can never be reversed. Never be deleted or altered. I have to reverse an entry of 1 crore and pass a fresh entry of 50 lakhs. So in that situation, what is the question of an audit trail? But the reality is, in ERP also, there is a concept of audit trail which is being recorded. Because whenever I pass an entry for reversing the earlier entry, I have to have an audit trail saying that this reversal is because of this correction and this fresh entry is in substitution of that entry. So this audit trail mechanism has to be there also. In case of tally, audit trail, who is passing the entry, everything is recorded. Now, if you have to give a report, what is it I have to give a report? This is a very, very big question which is happening. If I went through multiple listed accounts, listed companies where they are talking about audit trails, we are not able to confidently say whether we will be giving a proper report or not. But for this year, my only suggestion to all of you is, in case audit trail is not maintained, please report audit trail is not maintained. Because if the audit trail is not maintained, it will be a compliance issue in respect of the directors and the company. Let them pay the penalty. Because if the audit trail, if you mention, obviously notice will go to them. If you don't mention, and finally they find out that the audit trail is not properly maintained or not maintained at all. Because basically, most of the glorified proprietorship, which are all private limited companies, they pass an entry only at the end of the year. They pass all the entries only at the end of the year. So in those cases, if they find out, because nowadays they are not insisting on the printouts or your confirmations, etc. They are asking for the tally backup. If they see the tally backup and they found out that the audit trail is not maintained and if you have not reported, straight away the complaint can go. They will escape. We will only suffer. So in case audit trail is not maintained, please give a report and state that audit trail is not maintained. So acquire knowledge by literature and technology. Literature is sufficiently available, particularly in the institute. I don't know how many of you are aware, there is a directorate called as Center for Audit Quality Directorate. This has been created a couple of years back, in which they are because that has been necessitated, because most of the standards and documents which have been created by the institute are only for larger size of clients. So they decided and found out that the small and medium practices also has to be supported. For that, they created an item called Center for Audit Quality Directorate, which was providing standardized documentation in respect of various clients, which are available in CAQ, Center for Audit Quality Directorate, which is available in the website. Through that, you can examine what are the items which has to be done in case for small and medium enterprises and small and medium practitioners also. I am talking about both the items, small and medium enterprises and small and medium practitioners like us. Technology, as I told you, that is also to be upgraded. Training. We have to be trained and we also to train the students, because as I was telling you, back reconciliation FI, that is not sufficient. We have to generate this reconciliation, compare the closing balance and then forward. Sir, is it not what you call mundane creation of papers? No. You don't have to take a printout and keep it. Just download it, record it as having verified there and convert it into PDF file and keep it. Because if you keep it in the Excel file or Word file, that is not sufficient, because it is amendable or alterable at any point of time. Date stamping, sir, Nafra paper, he is asking for the date stamping. When was this document which has been created? Because they raise an issue and they come and ask you for audit working paper, your Excel sheet they are saying they are able to ascertain when all these corrections or modifications has been made. It is sufficiently available. Information technology, helpful, danger, that's reality. The point is, we have to ensure that we are SA 230 documentation has to be contemporaneous. It cannot be post-audit. It has to be concurrently done with the audit. If you do it post-audit, you will not be able to confirm that. Probably, other than they have given 2 months time. The 2 months time is given for not for creating documentation. The 2 months is given for assimilating the documentation. People are under the wrong impression that they are giving 2 months time for creating this unit only for doing the documentation. It's not the case. Documentation has to be parallel along with the audit. Assimilation can happen within 2 months and then you can create the unit. There is the intention with which the due date has been extended, but 2 months is too long a time in my opinion, but unfortunately it has not been happened. So get acquainted, training on both sides, from both on my side and also for the students, both in room and off room atmosphere. Implement. Whatever you read, whatever you learn, first you try to implement. By implementing, that means you have to examine whether this ERP, for example, this is an important area. Very many of us does not know how the ERP functions are, because it's absolutely clueless. Any ERP or SAP, if you have interacted with any of the SRP implementer or SAP implementer or ERP implementer, they don't know about debit and credit. I don't know whether you have interacted with them. They will know only add, remove, add, less. That is, whenever you purchase an asset, they say add fixed assets, reduce bank. That's all they will know. They will not know fixed assets accounted to bank. That is what we understand. That they don't know. They only add, because they understand this particular account has to be increased, this particular account has to be reduced. They know double entry. But WND they are known as debit and credit. They are known as add and reduce. So there is a huge gap between. That is why nowadays SAP and ERP implementers are in recruiting chartered accountants into the roles. But still, that is not sufficient for them to do it. So they are working only with the engineers. Engineers and MBA graduates, they don't know about debit and credit. So there is a what you call cultural difference itself between them. So please ensure that when you do the ERP environment audit, you are updated with the technology and you are also able to examine it in a proper manner. Review. Whatever I do, I want this to be reviewed, particularly in respect of large clients. Please ensure that it is being reviewed by another partner, because very, very difficult to say that I am doing it in a perfect manner. It is not possible. Somebody else has to review it so that the papers are properly done or not. Because some items we keep on only a familiarity. We know this particular client will be doing like this only. We know the transaction, we keep on doing it. At some point of time, they change the track. We will not be able to observe it because we are going on a preconceived note. So do a review by another person. 75% of the time it will be clicking. 25% there also there is a risk available. See, any controls, any risk can be controlled, cannot be totally removed. On the basis of the review, please do the improvement. This is called as CPE meetings, Continuous Professional Education Committee. CPE committee is the Continuous Professional Education. We don't know how much we are able to improve upon it. We have to continuously keep on improving. Whenever there is a gap which is available, that gap we can improve it next time. As far as literature is concerned, these are all the indicative lists. This is not exhaustive because there are lots of surpluses that are happening. All of us know about this. Accounting standards and auditing. Our concentration is only going to be on these two items. Of course, India is a IFRS gap. Only larger organizations and listed concerns will happen. Statutes, all the statutes we are supposed to understand. See, in the Code of Ethics, the next session I will be able to talk about a concept called no law. We are supposed to know all the laws of the country. Lawyer does not know anything other than criminal procedure code and civil procedure code. Doctor does not know anything about other than the medical documents, etc. But as far as audit is concerned, I am supposed to know criminal procedure also. I am supposed to know the accounting standard also. I am supposed to talk about the, because the concept is they feel that we are the persons who certify the financials. On the basis of that, an investor is coming. On the basis of that, a banker is coming. On the basis of that, supplier is supplying the material. So they feel that we are the persons who are hand in glove with the client. And guidance notes, institute is giving guidance note left, right and center. Guidance note, it's very, very tough for us to digest the guidance note. Because it will be this sort of a big size guidance note. Only thing is, we should know where is it available. If you don't know where is it available, you will not be able to do it. For example, I always talk about this in the institute presentation. So whenever we do the guidance note on bank audit, because it's such a big book, nobody will be able to do it. 4 years back, when I was the chairman of this study group, Chennai study group, we decided that we will be dividing into two items. Guidance note on bank branch audits, guidance note on bank statute audit. That was made as 2 books. So from that, it is still continuing, but now it is not considered as 2 books, but it is given as 2 separate parts. In that scenario, as far as branch audit is concerned, they don't have to pick up a bigger pillow. They can go for a smaller pillow. That's all. It's a small one. We can reverse it wherever we want to do it. Because when you go for a small branch audit, which is only 10 crores or 20 crores or 30 crores, as the case may be, you may not be having any facility other than your loans. So in that situation, you can restrict only to that area. Same way, if you go for a small private limited company audit where it is only 20 crores of turnover, you may not be required to do the entire transactions of manufacturing activities at all. There is no requirement. Like that, guidance note also, you choose and pick which are the areas to be verified. Implementation date. Whenever an accounting standards is given or whenever new statute comes, there is an implementation date which will be given. For example, take the case of CARO. CARO is confusing. CARO implementation guide is equally confusing. But we have to go through that. The reason why I am telling this, whenever we give a report, if we are following the guidance note which has been given by the institute, we are following the implementation given by the institute, we are protected. So for which we have to prove that we have gone according to the guidance note. One classic example I will tell you. This is a question which has been received across the groups wherever I have addressed. Inventory verification in respect of a client. Am I required to go for a physical verification or not? I am also putting the same question to this. Inventory verification in case of a manufacturing activity or a trading activity. Am I supposed to be verifying the inventory or not?
restrict the inventories done by management.
Okay.
Kept yellow tags or whatever, physicals first. So you can go and they'll give a list also of all the items inventory. So we can random sample check and ask them to weigh that or count that and show.
Any other answer? Any other input? Whether inventory, we have to be part of it or not. Whether in inventory, 31st of March or 31st of December, as the case may be. So all of us know that we are between the cargo. Inventory is periodically verified by the management. All of us know inventory is periodically verified by the management. Whenever there is a discrepancy, it is being properly treated in the books of accounts. That's what we say in cargo. In this scenario, should I be part of the inventory verification or not?
It will not be at the year end alone. It will be surprise audit during the course of the year.
His point is well taken. Is it required? He says that it's a suggestion. Is it a suggestion or is it a compulsory? My question is that. Compulsory. Where do you get it from?
It's a part of cargo where it is.
Karo is not part of Karo, sir. Karo is the physical verification done by the management is part of Karo. But me has to be part of the verification. Where is it?
No, so all the items that there is a value for it.
Yeah, okay, value for it.
There is a register for that.
Internal audit?
Or internal audit should be done. But statutory, I think it is not necessary, it's not practically possible.
Any other answer? I got one answer which I wanted, it has come. Any other answer? Why I am telling this is, many of us are under myth actually. Many of us are under myth that it is not required to be going for audit in case of statutory audit requirement. It is not the case. Standards on auditing is very specifically saying that wherever the risk of materiality of a particular item is huge, those items we are supposed to verify as to be part of it. I am not supposed to go and literally verify each and every item, as Sir was rightly telling. I don't have to go and physically verify that so much of stock is there or not. But at the same time, whether the physical verification is happening at a particular client's place, for which we are supposed to be part of the entire unit verification, can be on any day, as I rightly said, need not be on the end of the year, need not be on the 31st of March, need not be subsequent years. But ideally, in case of large undertakings, it's better for you to be there on 31st of March itself. Because if the asset size is 100 crores of the company and the inventory is around 30 crores, definitely it's material. So whenever an item of huge materiality is there, in those cases, SA requires you to ensure, to verify that the evidence is properly given by the client and whether it is properly done or not. Because that SA, that balance sheet coupled with this cargo, we are bound to examine whether the management is periodic verification. Whether it is periodic verification, just giving a certification that we have verified on such and such date is not sufficient. Unless and if you are part of it, you will not be able to ascertain that. So it is ideal. I am just taking a classic example for that particular item alone. We are supposed to verify that in the SA, in the implementation case, both items they are making it very, very clear, saying that wherever the risk of material misstatement is there, in those cases, we are supposed to be part of the audit in a proper manner. So in that scenario, it's better to go for physical verification. Whether we are supposed to lift each and every item and examine, no, that is not the case. But at the time of physical verification, it is better to be part of it, at least for large undertakings. Smaller undertakings, particularly in respect of two different groups are there, we have to be very careful. Because please understand that if there are two managements of the same company, that is A group and B group, both of them are jointly doing the management company. We cannot side with anybody. Please ensure that we are parallelly running with both of them, because at some point of time, if he is affected by this person, he will go and complain to anybody, and immediately he will say that audit is collaborating with them. I will take a classic example one side here. There was a partnership firm. There were two partners. The company's turnover was only 38 lakhs. The person who is managing partner who are running the management has given the balance sheet duly signed by a chartered accountant and filed to the bankers, and they have taken a loan of 20 lakhs of overdraft, and it has been running on. So 38 lakhs is only the turnover, not even now the 1 crore. 38 lakhs, which means that is not coming under tax audit also. I am talking about 6 years back with the 40 lakhs limit order. 38 lakhs tax audit was not there. The auditor has signed the financial statement. What is it? They have signed the financial statement, checked from the books and records and signed them. No audit report. The other party who is affected, the other partner who was affected, has gone and given a complaint to the institute saying that the party A and the auditor has colluded with each other and signed the financial statements and submitted the report. The member is coming and telling me, to protect the case, coming and telling me, sir, I don't have to do an audit, sir. It is not coming as a tax audit, sir. I signed the balance sheet only for the banking purposes, sir. Now they are giving a complaint. They can. The reason is there are two. One is the partnership deed says the financial statements of the company shall be duly audited by a chartered accountant and the balance sheet shall be signed by both the partners. Partnership deed says, number one. Second issue, whenever you sign a balance sheet, you cannot sign a balance sheet without a proper certificate. Let it not be tax audit under compulsion, no problem. Even a non-tax audit, why take the case of non-tax audit? Take the case of a 4480 case. 1 to 10 crores, you are not liable to do an audit at all. So in those cases, they ask for a balance sheet purpose, bank purposes, they ask for a balance sheet. What do we certify the financial statements? We confirm that we have verified the books and records of such and such company, and on the basis of the verification of books and records of the company, the balance accounts show true and fair view. For 4480, you say that there are no books of accounts maintained. Now you are saying that there is certified the books and records. Sir, that is given by him only, sir, not by me. That is not the way. Once you say that books of, see, it can be there. See, for the purpose of income tax, I don't have to maintain books of accounts. But for this purpose, I have to maintain books of accounts. If you don't want to say a books of accounts, you can give it as a compilation report. Don't give us a true and fair view report, you give us a compilation report. Take it as a compilation engagement. There is a standard report which is available in the institute. I have compiled the books and records and I have not done the audit. You can give a compilation report. But once you give an audited financial statement, there is nothing like checked and code correct. There is nothing like an as per books and records produced. There is nothing like as given by the management. All these things are wrong. If you give that and create a unit, you are in for a problem. So the point which I want to drive home is this implementation case, standards on auditing and accounting standards, we are supposed to be updated. Even if you are not, none of us can fully by heart it. It's not possible. But at the same time, we should know where is it available exactly. On that basis, we do it. And the last one is industry-specific guidance notes. They are also giving industry-specific guidance notes in energy companies, social responsibility companies. All these companies, they are coming with special guidance notes. So whenever you pick up an audit of that, NGOs, if you are going to do an audit of NGOs, please go to the specific guidance note. Then we will be able to. So first of all, let us understand what are the guidance notes which are available. Accounting standards, unfortunately, many of us know what is the number of accounting standards which is available also. They always say 32. 30, 31, 32 is not at 25, so we don't have to bother at all. Up to is 1 to 29, except one standard which has been removed. This 28 standards, we have to know what is the standard. Otherwise, it is going to be a serious problem. So, the coverage is going to be on standards and auditing and accounting standards criticality. What is the criticality all about? In the standards and auditing, in my opinion, there are two items which are very, very critical. There are lots of standards which are critical, please understand, but these two items are very, very critical. This 580 and 230. This 230 and audit documentation is absolutely important because if you don't have a proper documentation today, you will not be able to defend after 5 years. All the cases happen only after 5 years, not immediately. So after 5 years, when they come and ask a question about you as per see, and audit yaar panna the case sir, no panna the payye ko poita the tona we will not be able to tell anything at all. Unless otherwise the document, see, audit documentation 230. It says very, very clearly, even in your absence, somebody will be able to read through the papers and say that the audit has been done according to the standards how it has been done. If that is not able to be, this is happening in case of medical standards. In case of medical, what you call files, whenever operation surgery happens and finally when it is discharged, the discharge summary explains the entire activity, how it has happened, how he was admitted, in what stage he has come, and when he has been put on ICU, after that what are the process which has been done, and who are all taken up, and who are all brought as consultant, and finally what was the treatment which has been given. After the treatment, what is the post-discharge advice which has been happened, and he has been asked for a review after 1 week. To the extent medical history is happening. Are we able to give that sort of documentation as far as our audit is concerned? No. In that scenario, we are going to have a problem. So whenever I pick up an audit of the next year, I should be able to pick up the previous audit report. நம்ம பசங்க previous audit report பார்க்கறாங்க. எதுக்கு பார்க்கறாங்கன்னா அந்த ஃபார்மட் வாங்கி அப்படியே டைப் பண்ணி so 33,000 இருக்குதா 20 மார்க் மாத்தி பிடிக்கிறோம். Which is not the case which I put. The point which I want to make it very clear is You take the case of the previous year's information. On the basis of what is applicable for the current year, you apply your mind and start doing the audit, not the cut and paste issue. The cut and paste issue not a problem. Last week I got a case. In 2016-17, they have given an audit report of 15-16. They have given a report of the financial statements have been prepared in accordance with the Companies Act 1956 and the depreciation has been provided according to Schedule 14 of the Companies Act 1956 in 2015-16. கேட்டான அந்த ஆடிட்டர் சொல்றா சார் முன்னாடி வருஷமா அப்படிதான் சார் 2013 அமெண்ட் ஆயிடுச்சு சார் ஷெட்யூல் 2 வந்துருச்சு சார் கம்பெனி இதில் ஷெட்யூல் 3 ஃபார் ஃபினான்ஷியல் ஸ்டேட்மெண்ட் சார் கம்பெனி 2013 வந்துருச்சு சார் மிஸ்டேக் they are examining. See, it's not a small company, sir, it's a listed company. But no activities, so nobody bothers. And no activity, the auditor is not, the client is not able to pay beyond 20,000 rupees. For a listed company, the payment will be anywhere between 5 to 10 lakhs or more also. In case of a listed company which does not have an activity, they are paying hardly 20,000 rupees. In that scenario, the last year, sir, I am not joking, not for the purpose of laughing. The case has come to me, I am going through the case. How it has been defended, we are trying to find a way out, but it is not able to be defended at all. The point we make it very clear is, cut and paste cannot be there. But only for the previous year data has to be examined for understanding what is the environment of the organization, so that you will do it in a proper manner. And that need not be the exact thing. Last year it could have been a trading and manufacturing company. This year it is going to be only a trading company. Next year it may be only a service company. So the same concept need not be followed up, but at the same time, we should be able to have an idea of the previous items. Certifications, very, very important. Even the certifications are important. Attest function means including certifications. And last item is SAE, SRE and SRS. These items are also as utilized. I will go through that in the respective slide at that point of time, because assurance engagement is there, review engagement is there, and standards are also there. The related standards are also there. Related statements. Why it is becoming material? I am talking about standards and accounting standards. All of us know material, because the financial statements, we also say that the financial statements has been prepared by the management in accordance with the accounting standards maintained by the Indian GAAP. All these things we are reporting. So once I say, I am also confident that sir, accounting standard follow that financial statements will not be true and value. All of us know. But 143.9 has become mandatory, which states very clearly total complaints has been issued. Because in 143.9 they are saying that standards on auditing issued by Institute of Chartered Accountants has to be followed. Accounting standards as given in AS Rules 2006, but auditing standards, because NAFRA is not a notified auditing standard, still they consider that institute as a good institute which can give standards. Standards on auditing is still issued by the Institute of Chartered Accountants. But 143.9 says that auditing standards standards on auditing issued by the Institute of Chartered Accountants has been followed. It has become mandatory. It was not mandatory earlier. It was only advisory in the earlier occasions. Because of the amendment to 149, that is because of the insertion of 143.9, it has become mandatory. So that's all the line. Now, SA is law just as AS. Many of us do not understand, because we feel that accounting standards is important. Standards on auditing is not important. Please understand, SA has become law like AS in the earlier occasions, notified by the Companies Act 2013. I don't know how many of us know. It has been established now for the past so many years, but still people are not understanding, because standards on auditing, they are giving it as a go by. Accounting standards they ensure, that is checklist, every company is having, every audit firm is having, any mid-sized firm, I understand they are having a checklist for accounting standards, but they don't have a checklist for standards on auditing. Particularly in respect of evidence, 230 and materiality, we are not having any standards at all. The statements has to come automatically. This is the evaluation which I don't want to raise. Every auditor shall comply with auditing standards. 143.9. Yes, sir.
This says standards on auditing compulsory for both private limited as well as.
Yeah. Not only private companies, sir. It is even for proprietorship. It is there. Private limited company, public company, it is mandated because of Companies Act 2013. But as far as the institute is concerned, even in case of a proprietorship company which is subject to audit, even for a certificate for a concept. Good question which is asked, whether it is mandatory. I will take a classic example of 15 CACB certification. 15 CACB certification, all of us know what is it exactly about. We are examining whether the remittance is done in accordance with the statute and whether the required TDS is deducted or not. Many of our members are under the impression that what is liable for TDS we have certified. With that my job is over. Because if it is 10%, 10%, 20%, 20%, 40%, in case of a non-resident payment, 40%, the highest tax has been limited, sir, then what is the problem? I'll tell you a classic case. Last year it has been notified in a particular case. I don't want to mention the name of the auditor. 2 years he has been banned. What is the reason? He has not examined properly in respect of the remittances which have been done by a particular HR company. 75 signatures he has signed. What he has said is, the client will come with the invoice copy and ask for a certification of 15 CA. They will prepare and they will ask for me to give a 15 CB. I give a certificate. That's all. The point is, in this 15 CA we are not saying that whether the necessary TDS has been written. That is not the only area we certify. We certify a lot of other items which we are not understanding. We are saying that we have examined the records, we have verified the records. So whenever there is a fraudulent intent which is there, I am supposed to examine whether the fraudulent intent is there or not. This is an aspect of HR payment. So purpose of payment, who is the payer, who is the payee, what is the purpose, and the purpose also we are supposed to examine, and then we examine. It's only incidental. The TDS portion is only incidental. The importance is whether the payment is properly being made or not. For this, I have to go to SA 500 which talks about evidence. So whenever they are remitting to, for example, Hyundai India is going to pay to Hyundai Korea for the purpose of material which has been supplied by that, or advisory which has been done. Whether there is a what you call royalty agreement which has been done, whether it has been applied with the ROB approval, etc. You have to take a copy of the royalty agreement. On that basis, on the royalty computation. See, in respect of these components only, they will be eligible for computation. In respect of bought out components in India, they will not be eligible for royalty. The royalty agreement will state that royalty is payable at 6% in respect of so much of payment. Is it royalty day, ma? That's clear. What is the 11:30. Correct. Obviously, the association is the other. Organizers, tension. We'll have to go for a coffee, don't worry. 20 papers. So, why I am telling this about 40 CCTVs, auditing standards SA 500 has to be seen in respect of all these items. SA 500 evidence. What does it say as evidence? And SA 501 evidence in respect of special cases. As Sir was telling about inventory, SA 501 will come into the picture whenever you go on inventory verification. See, the point is SA is prevalent across our practice. Whenever I do an attest function and create a sign and create a unit, please understand, I am without anywhere committing. I am saying that I am undertaking the responsibility on the basis of the institute's auditing standards which has been given. So SA is compulsory, need not be for private limited company, need not be for public limited company, it is applicable for each and every attest function which you are doing. That is what is exactly as per the 1.39, it gives you the statutory empowerment. It is giving you a statutory empowerment, it is not These are the engagement standards which are there. SAE, SRE and SAEs, all is available in this visa.
How many SAs are there, sir? When we studied, it was very less.
No, now it has come more than 20. I will list out those items. It is available in the literature. But what is relevant to us, we will ensure. See, for example, SA 200 is important. SA 230 is important, SA 300 is important, SA 315 is important, SA 580 is important, SA 505 is important, SA 500 and 501 is important. These are all very significant. I will list out the items which is very, very important. I will not be going to the entire essays. So why comply with the other auditing standard? This is the classic trade style which has to be examined. I have highlighted only critical items. To utilize the resources effectively. If I don't have a proper planning, I will not be able to. Personally, sir, auditing staff இருக்கிற staff வச்சு மேனேஜ் பண்ண வேண்டியிருக்கு. அப்ப நீங்க பிளான் பண்ணாதன்னா நம்ம வடிவேலு சொல்றதானே ஆகும். எதை பண்ணாலும் பிளான் பண்ணி தான் பண்ணணும். நம்ம காரியம். Same way, ensure quality control. According to the standards, quality will be reasonably controlled. I don't say it is 100% confirmed. I hope definitely MNCs will not be here. I always say in all the places, whenever we do proper auditing, but we will not have a proper documentation. They do a proper documentation, may not be doing a proper documentation. 100% documentation will be perfect. See, in that situation, if you say that they are doing the best of the audit, how Deloitte is punished in case of a limited company. How PwC is punished in the case of Satyam. ILFS, Deloitte is punished. How is it punished? When the documentation is so 100% perfect, they have gone for an appeal. It's in High Court, but they are not yet exonerated. Which means there is also a gap which is available. Which means even if you make the best of the documentation, there might be a gap which is possible. But only thing is the gap will be minimal and you may be able to protect yourself. And finally, peer review, FRRB, QRB. I don't know how many of you are aware of this TAQRB, Tax Audit Quality Review Board. Previously, QRB was there. Only in respect of listed companies, this FRRB will be going through the listed company balance sheet. On that basis, the case which I was telling you is out of FRRB only. One particular company's financial statements, listed companies, it was not picked and chosen by any specific, they just picked up a couple of listed accounts. There are lots of violations that happened. On that basis, FRRB has given information to the institute's ethical standard boards and they have given notice to the member on the basis of information. The complaint can be on either basis of the information or on behalf of a complaint. They have taken on the basis of information. So, in that situation, take the case of TAQRB. In case of tax audit, is also quality review is mandatory, but they have not, they will pick up which is required. For example, if the institute, maybe income tax department gives a complaint on a particular client which is not properly maintained, then this TAQRB can depute somebody to go and verify whether your quality tax audit quality review board is null or not. So don't presume that I am not liable for any peer review. That is not the case. Even if you are not liable for peer review, even if you sign a tax audit report, there is a possibility that institute's quality review board may come for verify that. For you to pass that, you have to ensure that standards are being properly followed. Avoid disciplinary cases, COE. Disciplinary cases easily fightable and escapable. As the other gentleman was telling, when I am having all the papers, why should I bother? Yes, but once a notice come only, we will understand that. Because even the best of the members who have been doing the audits, when they get a notice, I'm sure one more example and we will break for a tea. In export incentive certification, there is an export incentive certification which is happening. The auditors fully followed all the papers, they had all the papers available. But what has happened is, this particular unit has been continuously getting that export incentive even in respect of exports done through third-party suppliers. For a couple of years it was eligible, for a year it was not eligible. They continue to have that also. But when they raised a complaint on all the chartered ones who were certified in the next 3 years. The auditor whom I was handling that, he has signed in a proper manner, but the point is 2 years has happened before the Board of Discipline has exonerated him, saying that he has followed all the standards. But this 2 years of hell he has gone through his mind. You don't know, he is at the age of 70, 72. His son is also a partner there. 70, 72 years, he is going through a hell of it for 2 years. So, we will only pray that we will not get any of these notices. But at the same time, if at all it comes, how I am protecting myself. For that I have to be sure how we make the documentation. Now I have to link it with your code of ethics. Class 7, class 9, class 5 and class 6. These are the 4 classes which will be critical as far as this code of ethics should do is concerned. A CA practice shall be deemed to be of guilty of professional misconduct if he does not exercise due diligence or is grossly negligent in conduct of his professional duties. When you will be considered as a negligent, when you will not be considered as a grossly negligent. You make a mistake once, you are coming under Gunda Act. For particular item, you negligent, we are making mistake. For example, in the case of this Companies Act 1956 instead of 2013. 2013 actually on this 31/3/2014 financial sign பண்ணும்போதே பாத்துறோம் 15 பண்ணும்போதாவது பாத்துறோம் 16 பண்ணும்போது நான் பார்க்கலன்னா I am coming under gross negligence. I am just taking one classic example, but that need not be the only example. Same way in case of 15 CSCB, I certify one item, 2 item, third item, continuously வரும். அதாவது நீங்க நம்ம வந்து நம்ம கையெழுத்து போறது நம்ம ஃப்ரீயா கையெழுத்து போறது தெரிஞ்சு போனோம்னா fees was only 1500 in that particular case. I am telling you, the fees was only charged as 1500. 15 CSCB, we cannot sign less than 5000 or maximum 5000 is the lowest beyond that, because the time which you take for examining which DTA it is coming itself, it will take around half an hour, 1 hour. Except in cases where it is a standardized mechanism, for example, freight logistics company, for the whole year remittances will keep on happening. In those cases, when you are assured that it is a non-resident, it is a P is outstanding, it is standard contract is available, it is remittances only, periodically it is being done, but contract is one contract. In those cases, there is a possibility it can be at a lesser remuneration. But 5,000 is very poor. But quality will suffer. So the quality will suffer because what we feel is, tax audit, 460 tax audit reports were signed some couple of years back. Fortunately now, Institute has given a mandate of 60. Whether the Institute is eligible to give us mandate or not, it has gone to the court. All of you know. Now the court has decided that in future, what Institute says is only rulable. But in the past, all of them are exonerated. Those who are signed, நான் பார்த்து 20 சைன் பண்றேன் 20க்கு 10,000 20,000 30,000 சைன் பண்ணி நம்ம சைன் பண்றோம். அது 460 சைன் பண்ணிருக்காங்க. எவ்வளவு ஆகுதுன்னா 750 rupees per document. And the point is, digital signature was with the accountant. We did not even have the digital signature. The digital signature was the accountant. Because definitely 450 certifications, you cannot do it in a month also. Because tax audit, if you have to do in a, particularly in the present scenario of so many classes, 40 classes, earlier at least 20 classes, now 10 classes, 40 classes, by reading the classes, even on all the other classes, whether this ICDSO, either match it will take at least 2 hours. Whether the accounting standards followed by the company and whether the ICDS is the same or it is mismatching or there is a gap which is available for that itself will take. Depreciation, book depreciation, income tax depreciation. How do you verify this for an amount of 750 rupees? Which means if you are compromising on the figures, financial figures, you will be compromising on the quality also. So as far as the class 7 is concerned, with this we will take a break. Though very simply worded, it's a very vital class. Gross negligence, due diligence. That is, there are 2 concepts. Whether he has exercised due diligence in doing the audit, whether he is grossly negligent. I will take once again an example of the inventory itself. Why I am picking up inventory is there is an area where there are lots of gaps which always happen. They can also take the debtors also. See, the client is having an inventory of an amount of 100 crores. They are keeping on giving a report without any proper information. They give the end of the year, they give a list of inventory, sign off and give it to you. You accept it as it is. It is negligent. But you know very well, but the factory has been closed because of various other parameters. You have seen that there is a factory which is available. They have suspended the factory. They are not carrying on any activity. They are closed. They were having 2 factories. One factory is closed. One factory only is operating. They are only operating. Members are reduced because of that salary expenditure is there. Which means you are supposed to have a professional skepticism to identify whether there is a change in scenario as far as this company is concerned. If there is a change in scenario, obviously you should be able to understand that the inventory value also should have been not this very high. There should be some specific area. Same in case of debtors. There are debtors outstanding for more than 6 months. Okay, you please give a report of previously less than 6 months, more than 6 months. Now it is age-wise classification. But more than 3 years debtors is there. 99.99% is not recoverable. What is the examination which you have done for ensuring whether the debtors is recoverable or not? Because we are giving the assets as due, properly recoverable, good and recoverable. How are you confirming that in respect of debts beyond 3 years? Because beyond 3 years, the party himself will lose the eligibility of claiming it because of the time-bound concept. So more than 3 years. So okay, more than 3 years, it is further 2 years more. I don't say that more than 3 years is not recoverable. For a moment, let us understand. Take the case of a government contractors. There is a retention money which will be maintained by the National Highways Authority of India, which will be paid only after 7 years. I am not coming into that picture. In the normal course of transaction, whenever I supply within 1 and 6 months I am supposed to get it. At least 1 year I have to get it. 2 years, definitely there should have been a dispute. 3 years, definitely more than 3 years not recoverable. So in that situation, as a chartered accountant, if I have left it like that and reported, it is negligent. After 3 years also, you don't ask a question. You ask a question, they give a justification that negotiation is going on. He has said that 25% he will pay now, and I am in a sickness, I will pay in a short term. Some correspondences. If it is there, you are negligent. If that itself you are not examining that, and you are just like that signing the financial statements, even without examining any of those areas, you are considered as grossly negligent. The member should also act diligently in accordance with applicable technical and professional standards. This is what is expected in class 7. Class 7 is very, very vital. Please ensure that whenever you read the code of conduct and schedule 2, you have schedule 1 is not of much of an important because none of us, see, as I was telling you, good auditor on personal side, good auditor on official side. Personal side, most of us are, not most of us, 99.99% are good. So we will not fall under class schedule 1. But please understand, parking a car in a public place is a professional misconduct. If anybody else is parking, nobody else may goes. But if a charter warrant with the board or a sticker or they can raise a complaint on it. Then it becomes other misconduct. So now the other part now most let us not bother about schedule 1, we'll bother about schedule 2 only. In that class 7 is important. The next subsequent 2 classes we will have it after the T grade. PDF professional study page to invite attention to any veterinary departure is generally accepted on procedures. So what happens is, not only the figures which has been given is true and fair, that is also not sufficient. If there is a material departure from normal understanding, take the case of impairment. Take the case of impairment occurrence. They are not allowed to ascertain the impairment. They are supposed to do an impairment and AS 20 has been completed. Whether they have examined, the management has estimated the impairment has happened and no impairment, they have examined whether an impairment has happened and they certify there are no impairment, all the assets are available. Fine, that is not a problem. But if they are not attempted at all, it's going to be a serious issue. Same will take the case of depreciation itself. That is, we know all the computers has to be depreciated a period of 3 years. That's what this section says. In that situation, they are saying that the value, the life useful life of the asset, they are determining more. Without comparing that, it's a deviation. That is, the management is eligible for the deviation. Management is authorized to have a deviation. But only thing is, the management has estimated the useful life of the asset as X, as against Y. In the statute, what is the schedule to what is the useful life of the asset, which is they said as 6. See, in this company, they are not operating for all the 6 months, all the 12 months. They are operating only seasonal items. So the management feels that the useful life of the asset is 15 years instead of 7 years. Then I am just telling you a classic example of an item. For example, a factory which is located in Darjeeling, they work only for 6 months time, taking an illusionary transaction. They are working only for 6 months. How a depreciation useful life of the asset is determined? It is determined on the basis of number of hours it is going to work on a day, number of days in a month, and number of months in a year. If I am saying that I am going to work only for 4 months, not the 12 months, in that situation I can very well say that useful life of the asset is slightly increased. They may have a justification. So, if they have a justification and the standard is Y and they are giving a justification for X, I have to bring that material departure. You have to bring it in the note saying that it has been done like this. So, class 9 is violative of situation wherein that if you are not bringing the reader, see, ultimately the reader of the financial statement should understand what you are intending to say. Sir was talking about professional protection and financial statements. I will come into that subsequently, but I am making it very, very clear. The reader of the financial statement should understand what is the difference. Yes, sir.
So when the impairment has not been considered at all, and depreciation policy from companies not following the AS10, in principle there is a violation of standard. Is it expected that the auditor should also quantify the impact, because that's not his job? That impact has to be brought up to the management.
If AS10 itself is not followed, it has to be qualified and you have to do the materiality. You have to quantify whenever you are going a qualification. Impairment you may not be able to require because you may not be able to ascertain.
Exactly.
But at the same time, you have to mention that the study on impairment has not been done, the amount is not quantifiable. But unless you tell that, you will be violating clause 9, because clause 9 says whenever there is, see what happens is in impairment I study, but I consider there is no provision which is being required to be done. There is a what you call, once again talking about larger organization where there is an engineer which is available in respect of plant engineer, he also certifies, management also certifies, they have examined the impairment, there no impairment is there and they are giving a certification. On that time I am very safer. But in case of a small units where it is available, and I know very well, go for inventory verification, at the same time fixed asset verification also happens. I know one particular machinery is there for donkey's time, which is not of any use at all. You got to ask for a specific question why it is not impact. In a classic example in an organization where they are machinery manufacturers, they are keeping one machinery for the purpose of exhibition. It is not a fixed asset, it is shown as stock only, but the machinery is shown as an exhibition because whenever the client comes and says that this is a machinery which we do, they are having it as a sample. That the management has recorded and it will not be subject to impairment because it is not to be used.
Sir, in some cases, he goes to TSTs, he manufactures right? He has, the machinery is dismantled completely. One more claim was that in makes CCM oil, that is in Japan. They have, that's not dismantled, no, that's not a mixer. But whatever it is, seamless, one part is from vendor. In this case, compared to this first case, where totally dismantled, seasonal kind of thing, right? When there is cultivation, they will be just dismantled 1 month or 2 months. That time you can't
The point is, the management itself dismantles it and keep it for overhauling, etc. Whenever they want to combine it, they can combine it. So in those cases, it is once again, we go to SI2 audit, objectivity of the audit. In this company business environment, that is what is standard. So when they do it, we will not be able to give a comment on that. But at the same time, if the continuity of operations and next year, this is not an is going on the same, that is they are able to assemble it once again and they have to do the project, you are not having any issue on impairment.
No, the time difference between the actual part, working condition. Between that, there is a 1 month or 2 months. Every 2 months or 3 months, they do this. So what happens is they set up one line of working. After that, they put up another line of production.
Alternate, they keep on alternating, correct.
So what happens is when the whole thing is getting calculated. So which part of this
once again, componentization concept will happen also in respect of those items. If at all they have done it,
even if there is a suspension.
Whether that particular asset, for example, that particular asset is componentizable, if it is done to be capitalized according to the componentization,
I'm asking about the useful life.
Useful life, management is having all the authority to say that useful life of the asset is X amount. But when Schedule 2 says that X useful life of the asset is X and it is going to be Y, which is totally different from that, you bring it as the report. I don't have to have a qualification. I don't have to have a qualification. I only have to bring it to the attention of, see, I will share a classic example, sir. We are doing a consolidation for a Spanish company, Spanish holding company. We are doing an Indian subsidiary. The Indian subsidiary is not willing to follow the Spanish GAAP. They are saying, making very clear, we will do only according to Indian GAAP. We are giving a report to the management because they are saying that you are doing it according to the Spain GAAP. So they are not interested. So when we prepare the financials, we say that there is no difference between Indian GAAP and Spain GAAP except the 3 items. What are the 3 items? One is depreciation, another is the inventory, investments fair valuation, and third is in respect of if I am right, inventory valuation mechanism. These are the 3 items which was a gap between those 2. So we say that these 3 items is different. We are doing according to Indian GAAP, and we give a report. It is for the consolidation auditor. What the consolidation auditor says is, your unit is very, very negligible for us. It does not have an impact for us, and they are leaving it like that. It is for the consolidation auditor to. We can say that because it is his responsibility. Same way in this current year, I am the central statutory auditor for an insurance company. So the regional auditors came and asked me, this is an item which I want to tell you how you are able to report it. You report it in the deviations. I will take care of it. Because I was so sure, I'm talking about audit mechanism. He said the audit trail is not properly done at the branch level. What do I do? Please report it, I will take it. In one particular region, they have done the fixed asset verification. Fixed asset verification, they have found out more number of furniture is available than what is available in the books. What do you do? The difference was hardly 3 lakhs or 4 lakhs. The total size of the balance sheet is 20,000 crores. 3 lakh or 4 lakh is not of any relevance to me at all at the head office level. So I said, at the same time, I don't want to tell the auditor, don't do anything at all. It is not possible. As far as you are concerned, you give a report in the deviation report. So much of difference is there. When you examine here, ultimately what happens is, how the assets are increasing, there is a movement between one unit to another unit in the same divisions. That they have not removed it, here they have not accepted. Ultimately, it will not have an effect for the organization as a whole. And the total value is only 3.5 lakhs as compared to 20,000 crores of the size of it. We leave it. So, as far as that unit audit is concerned, it is reported. The same way in our unit also, the areas which we have been given for audit for this particular year among the joint auditors, my area, there was a huge variation, which was costing around 56 crores or something like that. That was there was material for this particular activity, but for the whole of the company, it is not material. What we did is we reported in the joint auditors meeting. They recorded in the joint auditors meeting saying that it is not having a financial impact on the organization. So we will leave it with notes, not even EOM. We were insisting on EOM. It was decided that not even EOM, it is sufficient to make it as a notes and accounts because it's a standard procedure of the organization. I'm just telling you classic differences. So auditing is absolutely a subjective topic. It can be different for one person, it can be different for another person.
If the value is, compared to the assets, the value is substantially, more or something like that. It's taking a bigger size. So when how was this parallelly applicable to fixed assets? So this is a verification by the auditors compulsory or kind of lay upon management, or which means that they have to do. How is this take?
You are comparing equity and fixed assets. See, once again, this goes to the ROM, risk of material misstatement. What is the element of risk of material misstatement between fixed assets and stock? If you have a material misstatement in the stock figure, directly affects the profit and loss. If there is a material misstatement in respect of the fixed assets, it will not have a direct impact on the P&L account because it is only the depreciation which will have an effect on the P&L account. And another occasion is, if the assets is not at all verified over a period of time, fixed assets also, they say that it is periodically verified, and fixed assets register is also maintained. Inventory register is only a running concurring register, whereas fixed assets register is a static register. How many clients are maintaining fixed assets is another $1 million question, but let us understand register is being maintained. In that situation, physical verification happens, they also record it. So once they record it, I don't have to be physically available in respect of those units because the risk of material misstatement is not very huge in comparison with inventory. But at the same time, if an organization is dependent only on fixed assets and they don't have any other current assets or fixed assets, on which they are generating revenue by way of rental income. In those cases, whether I'm not talking about properties, I'm talking about equipments. For example, if there is a generator company, they don't sell generator, they only revenue generator on the generators which they have it as a fixed asset. In those cases, the basis of the revenue generation is the fixed asset which they are maintaining. In those cases, fixed verification we have to be part of. So, once again, it is a subjective matter. Where is the ROM lie? Where does the risk of material misstatement lie? If it lies here, you please do that verification. If you don't, once again, subjectivity. So, as far as this is concerned, SS compliance with the members is required in respect of whenever there is a material departure from the normal accepted standards. Whenever a standard is there, please ensure that it is properly reported. I was during the tea break which I was telling, in case of the inventory, you can go through and cross-verify your reports in the certain companies. Inventories, you would have mentioned as 2 items. Inventories at cost as certified by the management. You can please go and examine whether you have given this in any of your financial statement. Inventories at cost as certified by the management within the bracket. Many of the balance sheets I have seen, both are wrong. Inventories cannot be cost. Inventory has to be cost or market price, whichever is lower. And the valuation AS2 inventory, you have to say that the inventories is valued at cost or market price, whichever under FIFO method or weighted average method. We have to mention the method also. And then we have to say that the cost includes components of cost. If you don't mention all these 3 items, then the reporting itself is wrong. As far as accounting standards is concerned, you have to mention how a cost is determined and what is the cost also. Cost includes raw material cost plus overheads as allocatable up to the level of bringing into the inventory, And wherever there are additional costs by way of conversion costs is there, that also has to be included on that. Wherever subcontract materials are there. If you don't mention all these three items, then the WIP evaluation is wrong. Cost of, and same as certified by the management, absolutely not acceptable. That is, we presume that we are washing off our hands by saying that as certified by the management. Same way, take the case of debtors and creditors. Debt, you can go through your notes and accounts. Invariably, you will be having that. The debtors and creditors, as stated in the balance sheet, are subject to confirmation of balances. Very many of us give that report. That report is ultimately dangerous for us because you will give a report here. The company will be having ICOFR. Internal financial control reporting will be there. Internal report on internal control reporting on financial reporting. ICOFR. If you say that it is subject to confirmation of balances, I am supposed to qualify the ICOFR. If I don't qualify ICOFR and I say that the subject to confirmation of balance, we are in for a problem. So there is every link with one report versus the other report. If you don't have an ICOFR, there is no problem. Same way in case of inventory, we say that physical verification is happening by the management in the car. Here we say that it is not properly verified. It's going to be a serious problem. So same way, if inventory verification is not properly done, you are giving it to the car. In the ICOFR, we have to say that there is a material misstatement which is possible in this process. So please understand that financial statements has to be compared with all the three reports, CARO, main report and ICOFR. All the three things has to be there. In respect of non-corporates, you may not have that difficulty. You have to have only the extent of the main report, which is otherwise non-corporate. This is what I was talking about. Risk of material misstatement. Very, very important. Whenever we do an audit, we have to ensure that risk of material misstatement, wherever items are there, it is very. I am taking only one slide for the entire risk of material misstatement. What are the items are available? Debtors, inventory, creditors, impairment, investments. All these items are critical items. I will explain each and every item or a small item. We have discussed periodically, but in case of debtors, I already told you about more than 3 years, more than 4 years, more than 6 years, etc. As far as inventory is concerned, non-moving items, slow-moving items are there, and there are items which is not usable at all. There are certain factories which they do manufacturing for a specific supplier, a specific purchaser. If that purchaser is cancelling the order, this cannot be utilized at all. I'm just taking a classic example of a foundry. Foundry, when they do castings, that is the foundry is there, they are doing casting for Ashok Leyland. If the Ashok Leyland does not supply purchase this casting, they have stopped the manufacture of that particular automobile unit and they don't want this supply. The entire stock which has been prepared by this foundry is waste. It does not have a value at all. So in that situation, what they can do? They can do a melting. See, what happens is there is a meltable value in respect of the foundry, but it will be having a value only to the extent of the molten metal size. They will not have the value at which it has been stated. So the realizable value will come down. So whenever you see the inventory, how long it is kept and whether it is usable or not usable. Take the case of an item of food and beverages use. Definitely it cannot be maintained beyond that level. Take the case of pharmacy industry. It cannot be maintained beyond the expiry date. After the date of expiry, everything is to be wasted or dumped. So depends on each and every case how this. So whenever, what is the risk of material misstatement? Whenever a statement of inventory is happening in a particular, all of you would have gone through the newspapers, etc. There is a case which is going for 3,500 crores of violation in case of Surana Corporation. All of you would have gone through that information in public domain. That's why I am talking about the case. In that case, the entire risk is only in respect of the inventory. What they have done is they have purchased a particular stock of gold from State Trading Corporation. They are supposed to sell it to ultimate consumer. Instead of selling to the ultimate consumer, they kept on selling through sister concerns. They created a number of sister concerns. A sell to B, B sell to C, C sell to D. It keeps on rotating and finally it is being sold to the ultimate. There was a sale which was happening. But what has happened is, in each and every company, the turnover keeps on increasing. A sells to B, B sells to C, C sells to D, T sells to A, and then A sells to ultimate consumer. So what happens is, all these parties are unrelated parties. That is, I am a company owner, they are all my employees, I create separate proprietorship with that, I kept on rotating this. In this, any rotation matters, it will come to a halt when there is a huge problem. it has come as a huge problem. For 7-8 years, they are continuously doing one particular year, they went for a problem. What's happening is, this movement of inventory among the various people was not at all recorded because there was no movement at all. There was no movement at all. It has gone from this pocket to this pocket, this pocket to this pocket, this pocket is gone. So, what has happened is in these cases, all the auditors are taken to task saying that you have not examined the risk of material statement. So, inventory in gold, such a huge cost of material, costly material, how it was examined or how it was verified. What is the methodology with which you have verified? None of them are able to have an exact explanation because there was no proper record at all. It has become a scouting transaction and ultimately it is considered as a fraud. I am not coming into the concept of fraud here. I am only saying that there is a risk of material misstatement in respect of the inventory, how it has to be done. The next is creditors. Same way, as good as debtors. Sir, debtors is sir, creditors is equally dangerous because more than 3 years, creditors having debit balances. Take the case of creditors having debit balances. I have given advance to them. He has agreed to supply, he has not supplied at all. Creditors having debit balances. Ultimately, you will be merging with the debtors having a credit. But at the same time, creditors having credit balances for a long time also is dangerous because there is a very possibility the amount which is shown as due to somebody is a bogus entry. At that point of time, some entry would have, it's called as book entry. Some book entry would have, ghost entry would have been created. It is continuously shown as creditors at a point of time. In fact, there is a possibility that because of that particular purchase, I would have taken an input credit in GST, which is not eligible at all. There is a very possibility. And in the case that creditor is an MSME issue, there are other issues of what the BH, all these things will come. So there also the misstatement is possible. Impairment we have already explained in the same case of investments. Whenever I have investments as one of the particular product which is heavier in the balance sheet, whether the investment is stated the correct value. Whenever the listed companies are there, we will have to state at the revised value. Whenever it is not at listed, unlisted balances, if there is a huge difference, we have to quantify them. If there is a huge difference at the top, if there is not, whether I have to restate or not is a billion dollar question. But at the same time, when there is a huge erosion in investments value, I am supposed to report it. So, if these items are not properly done, so my point is SA and AS, go to the respective AS, let it be AS on 2, AS 9, and of course next is revenue, I will come to that. Inventory, impairment AS 28, investments AS 13, all these accounting standards we have to go and examine whether we have followed up. And as far as SA is concerned, straight evidence, go to this risk of material misstatement, 315, 300, all these things will have to examine that. Where do you fall as misconduct? Clause 2, certifies and submits without examining the related records. Without examining, for example, inventory is that you don't see the physical record of the stockholding operations information, that is, these stocks are in your favor. In case of non-dematted transactions, you have to see the physical value. That company itself is not there. We know very well that the company is already owned up, but still they are showing a certificate, whether it is worth it or not. We have to examine that. So, clause 2 comes to the situation without verifying the record. Clause 5 fails to disclose the material fact in the financial statement. Material fact is the company itself is not there, still I am showing it as investments in my balance sheet. The asset itself is not there, still I am not impaired it. The asset does not have a value, it has already gone, I am not showing the impairment.
Now this, for private limited companies also, the share certificates will have to be demat.
Not all the private companies, non-small and medium companies. Small companies still can have it as demat.
What is the limit, sir?
Small and medium companies, any companies which is coming under this definition of small S and C, they can continue to have it as anything not coming in SNC. That is 50 crores and above turnover and the capital, that concept is there. If it is not non-SNCs, they are supposed to do the demat. So, class 6 considered by fails known material misstatement appearing in the financial statement. We know very well that data is still not there. Still I continue to certify. The stock is still not there, I continue to certify. Comes under class 6. Class 7, I already explained, grossly negligent. Continuously doing the same thing. After 2-3 years also, I continuously doing that. It is grossly negligent. Class 8, failed to obtain sufficient payment for expression of opinion. As we were talking about impairment, you ask for the certificate from them. This particular asset is not impaired, but it still has a value. You get a certificate. Without getting the information, you are not supposed to. In the same way, inventories also. What are the list of inventories which are available? Take the list of inventories. Wherever they have examined that. You also cross-verify with yourself and do it. Yes, sir.
compare it with the qualification of the audit report. Is it not like a duty of the directors to?
It is, so the point is whether that examination has been done by the management or not, and if you are satisfied, no qualification, nothing is required. You ask them, nothing is required. You ask them, they are not satisfying your requirement, you go and see that you understand that a huge asset is totally, take the case of, in fact I had a classic case, I will share it with Elite Group. I was an auditor for one of the atomic research units, which is in Kalpa. There, that particular asset has been created over a period of so many years, and still it is not yet implemented. It is requiring an impairment, but at the same time, they are making it very, very clear it is not impairable because the life of the asset is yet to be incorporated and yet to be commissioned, and still it is in the situation of this thing only. The management gave a lot of certifications, information, and why it is not impairable, for which they gave a justification. All these justifications, we keep it in our pocket and leave it like that. No qualification thing is required. But at the same time, if you are very sure that a particular building is there, which I'm not talking about, take the case of Delhi airport. We know very well that the airport, that particular portion is already gone, it has gone and demolished, etc. In that situation, that particular item has to be removed from the asset. In the IA's balance sheet, that particular division has to be removed and it has to be reconstructed totally. So knowing that, if we continue to have the same balance sheet, is done better. So please ensure that when we know very well clearly, take the information from them. If you don't have sufficient information from them for supporting you, you will be in a serious problem. Sir?
Coming directly to Kalpa, in the case of self-developed assets, what are the verifications?
Self-developed?
Assets.
It's a self, the asset is built up over a period of time, sir, for which there are information continuously available. Over a period, the balance sheet keeps on accumulating only. Okay, it keeps on accumulating. So whenever you see that, you take the basis of the opening balance that you cannot question because it is done by another auditor. Current year, what are the additions are happening, whether it is genuinely required, genuinely added, and genuinely addable, that you certify. One advantage in respect of, I took a wrong example, but I am telling you, these are all examples which are being subject to audit of CAG also. They also keep on doing the verification. Once a big auditor comes and says, if I am certifying, see, I am not absolved of the duty. In a branch audit is happening and a head office audit is happening, both of us are not absolved. Same way, just because CAG is done, we are not saved. But at the same time, CAG will give an authority saying that this is how it is happening along with the management representation. Management representation will be strong as possible. None of the assets have been gone. It's only an improvement in the asset and they will be able to show it as also. See, the point is, in case of plants, thermal plants, not only Kalpa, any thermal plant if you go, you will be able to ascertain, for example, if this room is planned, you will be able to understand how the improvement is happening. Keep on knowing improvement, and whenever the deterioration is there, that will be spent as spares can be, for example, this particular spare can be demolished and gone. That they will remove it from the asset, they will bring a fresh asset improvement. So that will be a proper recording which is available. Only thing you can be assured is opening balance you will not be able to revisit it because already added by an independent auditor, and what is added only you have to ensure, and during the addition if you examine and find out it is a replacement for another item, the other item should be written off whether it has been written off. So in these cases what are the safeguards which is available? I have given the safeguard also. AS2 has to be complied with the procedure on say 501 para 7 and 7 along with there are other paragraphs on 501 in respect of special evidence for other categories. I have just given the paragraphs. What it says is whatever I have discussed only it has said, but go through that. Follow external confirmation procedure on SAP not pay. In respect of debtors and creditors, you please ask for external confirmation, and ideally external confirmation can be directly sent to you. That is, the client should send the external confirmation to the party with copy to auditors. How many cases you have to pick up, that is dependent on you. Last year you have picked up 20 cases out of 100 cases. This year you pick up a different 20 cases. And particularly in respect of the long outstanding cases, please pick it up and ask for a confirmation. If they still continue to have the confirmation in their books also, then you are safer. If they don't give a confirmation, you are in for a problem. Because only when they give a confirmation, they will say it is not confirmed, it is disputed. Once they give a dispute, I will have to either provide for it or I have to write off my books. So external confirmation is very, very relevant. AS 28 on impairment and AS 10 on fixed. If it is not possible, the auditor may very well qualify the opinion and express limitation in the audit report. If you are not able to qualify clearly, you give a limitation of audit report. Because to that extent you can very well protect yourself and leave it like that. Beyond that you cannot go beyond that level.
So this debtor confirmations, we seek confirmation from the parties, but they don't confirm or they don't respond. What to do?
What we do is in our case, in our clients' cases, we say that we don't have receive any confirmation in the next 15 days. We can presume that the value is safe. So if you do not confirm, it's a negative comment. Believe it. Sir, that too. Only few people are not confirming, sir. Many of them are confirming, but only thing is people are not taking any steps. Change in demand and market conditions. Whenever there is a change in demand or market conditions, take the case of cracker units. Last of 3-4 years after the COVID, cracker units have definitely gone for a 6. And moreover, now social economic background and environmental protection. They have gone for a 6. The business is not that very good in respect of cracker industry. So if at all you are an auditor of a cracker industry, you have to understand as to the market condition what is relevant. So SA 200 comes into the picture. SA 200 says objectives of audit. You please go through that SA 200. It gives you spoon feeding. What are all the things that we do. Only thing is we are not going through that. On that basis, these are all various standards. So the AS 9 on compliance with revenue recognition. Revenue recognition, whenever, see what happens is in case of a software industry, once US collapses, here software industry will collapse. Because we are over dependent on US. So in that situation, a company which is exclusively supplying for US industry only, I should be able to understand whenever a US collapses, we are obviously affected because of that. In that situation, what the client will normally do is, they will have this expenditure shifted to prepaid expenses. That is what are all the employee concept, they will put it instead of prepaid, they will put it as project expenses. Because we have 2,000 employees, 1,000 employees going on revenue income category and 1,000 expenses, we are putting a specialized project. Ask for what is a specialized project. Because basically they are deferring the expenditure to be shifted to the next year. Because presuming they will be making profit in the next year. If they don't make a profit in the next year also, and the next year also, and then next year also, what will happen? The entire equity will be eroded by the 4th year. So in those cases, we have to understand SA 200, which is an objectives of audit environment and also environment of the business and also knowledge of the business of the client. If you go through all these items, then you will be able to ascertain correspondingly what are the things which has to be examined. I will give you only 2 examples. One is the cracker industry, another is the US software industry dependent on exclusively on US. Not only US, there may be a subsidiary company in India which is exclusively supplying only to an organization in Singapore. Singapore has banned, there will not be any more import from India. In that situation, because of the bilateral relationship, there is a problem. You are in sir. Yes, sir?
So in this kind of scenario, when you have the US counterparts, with the orders, working for them, most of the Indian offshore units, what they do is, there is no one single parameter to see how you create the intangible asset in one side. The other side is deferred revenue expenditure. The other side is the prepaid revenue. So what is one parameter? How are the things classically do intangible? Because most of the things beyond say 1 or 2 years, they want to make it something like a copyright or IP kind of thing. So how do you allow it and how do you measure it and then because most of the things consultancy expenses.
See, the point is, once again I reiterate my point, by giving this various nomenclature, by giving what will be the nomenclature which they are saying, they are deferring the revenue to the revenue expenditure to the next year, we should be open to it, we should be able to understand it. Whether there is a genuine project which is happening, I have a classic example in case of a software company in this, they are creating a software for banking environment. They are creating a software for banking environment. They are trying to sell it. This keeps on accumulating every year. There is an increase of 70-80 lakhs. It keeps on going as you can see. They are having contract with certain banks to say that you please do this according to that. After that, I will pay. They have paid only an amount of 5 lakhs as advance, but they have asked these people to develop it. My potential income is only 5 lakhs, which is shown as advance on debtors. My expenditure already increased is around 70 to 80 lakhs. Today, in this scenario, if the contract collapses, the 80 lakhs will be hitting the P&L account and 7 lakh, 5 lakh only will be taken as income. So effectively, 75 lakhs will be the loss. how do I protect myself? This is a classic example which you have taken. In this scenario, the project expenses which has been mentioned, you please give in the notes and accounts very, very clearly. The project expenses in respect of this particular product, in respect of this particular supply, in respect of this particular contractor, which is still under negotiation, or it should be saleable only when the project happens at that point of time. And the risk of write-off is also there. You please mention that. You don't have to qualify. But if the same thing continues for more than 3 years, 2 years or 3 years, in that situation, if you feel that the risk is increasing, you bring that same note and bring it to the emphasis of matter, EOM. Refer the notes here. To the extent you get a certificate from the management saying that still we are working with that. In next 6 months it will be clicked because it's a software. It will take some longer time. Only next 6 months we will click it. In that situation, in the emphasis of matter, you will mention that there is an item of so much of expenditure which has been incurred in the project expenses, which is not realizable in our opinion, but management is confident of the opinion. To that extent, I am not qualifying the report. I will not qualify the report for the first year. One more year it will happen. At that time, you don't have an option. You have to qualify. Yes, sir.
Do we begin the concept of going concern at that stage?
Sir, going there, I am talking about only one project. Sir, if they are only doing this, then there is a going concern concept is also affected. Yes, sir.
Sir, in a slightly tweaked scenario, right, where there is a uncertainty about the time frame with which you are working. There is another scenario where there is a certainty, like 3 years only this project will be there. You receive some 7 lakh per month, I pay say salaries, month on month 50,000 rupees. So the question here is, I know that 3 years will be the window. The 7 lakhs or something which I receive will be reimbursed eventually, if not in the first year, second year and it's just agreed upon. At the end of the year it fails or it takes shape. What is the treatment?
If it is fails, I have to write off the entire project as an expenditure. It will have an effect on the fee.
Can you wait till 3rd year? That's what.
Yeah, definitely I will not do. Because the project's period is 3 years, you can't write off in the first year.
Period of development is, sort of 1 year, 2 years, 3 years is the total productization.
Depends on the contract once again, my dear friend. We have to see the contract. If the contract says that there is a period for up to which this period is period of negotiation, period of these things are happening. I mean, why to the extent? You take a classic case of we are establishing a toll. I am signing off with the NHA to establish a toll. My contract is to have the toll to be established in this particular year. That is 2022. I sign off the financials and say that I will be constructing the toll against this road in this particular area. For establishing the toll, I have to acquire a huge amount of land. That does not happen. It gets extended. One more year, it gets extended. After that, I get the acquisition. But whenever extension happens, there will be a continuation of contract extension between these people. If the contract does not happen and they say that you do go with the help, I am not going to buy the establish the toll with you, my contract is cancelled. The contract is cancelled, they give it, at that time I have to write down. Even if I get the information that the contract is cancelled, I don't write it out, then I am having my loss.
That means you have to give the milestones to the
Correct. Milestone. See, there are contracts which are having milestone agreements, there are contracts which are having a period agreement, there is a contract which will be available only for the 1 year itself on various contentions. What is the agreement? If the agreement categorically says, come what may, if you don't supply this, the project is off. In that scenario, I cannot continuously have this project expenses continuation. What happens is the clients, they create camouflage agreement. Why go to that level of extent, sir? Take the case of some artists. Artists, they are, I hope all of you know that artists, the individuals can go on cash basis of accounting. So they keep on getting money from the filmmakers or producers but they don't show it as income. Cash base of income, entire amount has to be shown as income. They don't want to show it as income. So what do? The category go to the contractor and say that I am giving you an advance, but this advance is refundable if I don't sign off a film in the next 2 years. In the normal course, what happens is, whenever I receive the money, it is taxable because I follow cash base of accounting. But in this scenario, I am receiving a cash, but I don't want to show it as income because I am not sure whether, because any stars for that matter, once they become a star or even a superstar or even a mini star or mega star, they will be booked for the next 5 years. But next 2 years that films paid, the persons who have given advances, they will go back. They will not go for it. So this is definitely happening. This is a current trend. In this case, revenue recognition. I am coming to the revenue recognition on this particular item. So what is the risk of material misstatement here? I have to be very, very clear that in this scenario, I am not supposed to retain his revenue. Why I am coming to the situation, even though I have received the money, in the normal course it is accountable on cash basis of accounting, I have to retain his revenue. I am not supposed to retain his revenue because the contract between me and the producer states that this money is given only as advance in case I am not able to commit to the contract, because I am committing to him that in 2022 I am committing to him I will do a film before 2024. Take the case of Rajinikanth. For 1 year he does only one film. So, but his books are booked till 2025 today. Today his books are finished, completed till 2025 December. Today somebody goes and asks for a signing from him. He will agree, happily agree. Give me 10 crores. He will sign off for in 2026 I will do a film. What will happen in case he is not able to complete these other 2 projects now, or the next 2 projects fails? The third project of 300 crores will not happen. Leave alone as Rajinikanth. Because Rajinikanth is live, good example, I don't want to take it. Take the case of an ex-actor. He signs today. On 2025, he dies. The money is repayable by him or his legal heir to the producer. Because sleep more than I. Up to the சொல்றீங்க.
You said die. You said die.
That's why I always say that you should not use negative methodology. So what happens in that situation? I am having a liability. So a liability, it's a certain liability, I cannot take it as an income. Even though by other terms of conditions, I have to take it as income. Cash basis of accounting. So AS9 is different from your income tax methodology. Income tax cash basis or accrual basis is there. In case of this, same way it can apply for companies also. Companies normally, if it is not on accrual basis of accounting, I am not supposed to, the account is not showing a true and fair value. As per 209, it says that if it is not on accrual basis, it is not showing a true and fair value. But at the same time, when the income is itself is, I will receive the money, but income itself is not accruing, in that scenario, I am not supposed to retain the revenue. So, in that scenario, revenue is boosted. An item which is not takeable as revenue, I am showing that, you take the case of leasehold leasing companies. Leasing companies, what they do is, they enter into a lease agreement. The lease rate is 10,000 rupees per month for a period of 3 years. It comes to 3,60,000 rupees. But what they do is they enter into an agreement in such a manner, you pay 3 lakhs in the first year, 30,000 in the second year, 30,000 in the third year. And 3 lakh you pay in upfront. They take it as an income, which is not acceptable because it is basically a revenue to be retained over a period of time. The contract is over a period of time. So in that situation, this is actually an advance only, just because by way of an action of receiving 3 lakhs in your period and taking into the income as it's floating of income.
Franchise advance also.
Franchise, same way franchise advance also. So depends on case to case basis and on the environment and objectives of our audit. That is absolutely subjective matter. We cannot say A is equal to B, B is equal to C because A is equal to C. It is not possible in case of an auditing. It is a different issue. Also, Rama. Yes, next slide is going concern. Somebody was asking about going concern concept, so I thought of. Okay, I'm just picking up about the next item, which is threat to going concern. Whenever a threat to going concern is happening, see, going concern concept is a serious matter nowadays, particularly now this SC700 report itself has a separate paragraph on going concern. Previously, it was not the case. Previously, what has happened is whenever a going concern concept